You may not want to pay full price if there's a high vacancy rate unless you can improve the vacancy rate by putting some money into the property. So that all has to be part of your consideration. The next is that you're going to account for things like mortgage interest, and I just said the vacancy. And then once you get down to whatever that final amount is, that's going to be your net operating income, or abbreviated as NOI. And you'll find your profit by subtracting any non-operating expenses. That's going to be things like capital expenditures or improvements. So capital is going to be things that improve the structure, roofs, walls, mechanical, water, things like that. Once you get all of that, you're going to have a clear picture of what that profitability is. And then the other way that you can evaluate this, I talked about ROI. You can do, you can set a target ROI. Now, typically ROI is best measured once you've sold the property. Then you can see what your return is because you'd have real numbers to work with. But just like any other investment, you want to have a target rate of return or return on your investment. And so basically what you're going to do there is you're going to compare the cash that you earned or the cash that's returned based on the amount that you invested. And so the formula is very simple there. You can take your net profit, which is going to be adding up all of the things that I just said, right? All of your rent receipts minus all of your costs. That's going to be your net, divided by the total amount of cash that you put into the property as an investment cost. And then what you're going to have there is your percentage of rate of return or return on the investment. And the higher the percentage there, naturally, the better, but it potentially also means higher risk. And so again, you're going to have a higher ROI potentially on a short-term rental than you will on a long-term rental, but you'll also have more risk on a short-term rental than you do on the long-term. And so a lower number, of course, on the opposite side of that, is going to suggest a more stable, lower risk investment. So